Joining us today is Deborah Sweeney, CEO of MyCorporation. MyCorporation is an advocate for the protection of personal and business assets, and Deborah Sweeney has a great deal of experience in the startup and entrepreneurial industries. Now, Deborah, I know MyCorporation does a lot of incorporating in LLCs, but I know there's a lot more to the business. Would you mind telling us a bit about it?
So MyCorporation is an online legal filing service. We incorporate and form LLCs for small businesses. And our goal is to go beyond just forming the business, but also to provide a package or a bundle that creates a scenario where a small business can come to us and feel like they're getting more than just the incorporation, where we do domain names and startup packages and relationships with QuickBooks and other business products that we have partnerships with. So we create kind of business bundles that enables them to choose from one of a few bundles and make kind of an easy decision about their incorporation process.
In your opinion, what's the right point in time for an entrepreneur to create a legal business entity? Is it right when the idea comes to mind, or should it be further down the line when the idea is more solidified and ready to go to market?
Well, my perspective is that before you go into business and start selling products or services, it's wise to incorporate or form an LLC. And really, the incorporation process doesn't have to happen when you're coming up with your idea, because you're not actually out there accepting money and having co-mingled assets and those types of things. But that's not necessarily the case when you're having investors or people that are buying assets in your business or interested in investing in your business. And so with that said, when you have an investor, then you really need to incorporate or think of an LLC right from the beginning, because once you start selling ownership interest in your business, then you need to have some sort of form or substance from which you sell. And so that's where the incorporation or LLC comes in from the very beginning. But if we're not talking about that, we're just talking about, hey, I have an idea, you would not necessarily need to incorporate until you really get yourself in a business established. Want to open a bank account and start accepting money for that business.
How does someone know if what they're doing is just a hobby where they're making money, or if they should make it more official and form a business around it?
A lot of times when it's just a hobby, kind of a side hobby, and then you start making money, it becomes quite obvious when you need to evolve it to a business, in the sense that you start getting checks for your new product or service. And when you do that, you have to take it to the bank. And the bank says, well, is this your business? It's not under your specific personal name, it's under a business name, and the bank requires that you have an account in that name. And so with that, you then have to incorporate, because the bank requires incorporation papers in order to open the account. So that's sort of a practical reason, but the emotional reason is, hey, I'm giving up my other job, or I'm moving on beyond this other full-time thing, and this is becoming more full-time than I had anticipated. And that's sort of the emotional position at which a lot of people identify that they're no longer just having a hobby and they're moving on to a business.
Deborah, what are some of the mistakes you've seen business owners make when forming their corporations, and what suggestions do you have for them?
A lot of times when people form corporations, they think that they need to define the type of entity from the very beginning, in the sense that they need to be sure it's an S corporation or a C corporation, or the type of entity that it is. And the reality is that if you're formed, you can make changes and adjustments along the road. So many changes are based on your taxes and accounting, what kind of income and revenue your business is generating. And so those are changes that can happen down the road. You don't need to make all of those decisions right from the beginning. A lot of times entities form as S corporation, and then over time they no longer qualify as an S corporation. And so then they need to kind of redistinguish themselves as a C corporation and withdraw their S corporation election. And so those are changes that can be made, but I find that people get so worried about that making their tax decision or making their incorporation strategy so perfect from the beginning that they don't incorporate at all. And that's not the solution. Protecting your personal assets and saving on taxes are critically important from the beginning. So it's important to incorporate, talk with your accountant for the best strategy as you stand today, and then know that you can evolve that. You can even file a conversion from a corporation to an LLC. You can withdraw, as I mentioned, your S corporation status. So there's lots of variables that you can add in or make changes to based on your tax situation or your economic situation as it changes throughout your business life cycle.
So basically, don't get too hung up in the details. Start something, and you can always change it down the line.
Right, and I don't want to sound whimsical, like just incorporate, right? But it's important to make sure that you do from a legal standpoint, you're protecting your personal assets. You're differentiating your personal from your business. And then from an investment standpoint, that you have this structure that's in place from which you can sell ownership if necessary or to investors. So you want to have that in place. You want to look legitimate. And sometimes people get kind of mired in the details and they just never do it. And so I think it's important people kind of take that first step.
And what are the benefits of, say, an LLC versus a corporation?
So usually people look at an LLC as being a simpler form of structure. When new businesses are really new to being in business, they find that the maintenance of a corporation can often be significantly more time-consuming. So you have to have your minutes and your bylaws and your operating agreement and all that stuff in place with your corporation. And with an LLC, you really don't have to have as many of those corporate formalities. You don't have to have an annual meeting. You don't have to give notice of your meeting. So all of those little things that often come with a corporation and the maintenance of a corporation can be kind of not worried about. But with that said, both, you still have to have your annual filings every year and, of course, your taxes. But the biggest difference is that corporations are taxed at the corporate level and then they're taxed again at the individual shareholder level, whereas LLCs, the taxes pass through as if it were a partnership. And so in that instance, it's just really a tax analysis. How most people talk to their CPAs when they're in business for themselves, and they figure out kind of what's the best structure for their business. Should they be taking it at the corporate level and then leaving the rest of the profits in the business, or do they want the income and the revenue of the business to pass straight through onto their personal tax return? And one thing that's interesting, it used to be very clear that the corporate tax rate was higher than the individual tax rate. That's no longer the case in many instances. So now it's not so crystal clear that someone doesn't want to be taxed as a corporation, because sometimes the corporate rate is actually more beneficial than being taxed at your individual rate.
And you're quite an entrepreneur yourself, going from general manager of MyCorporation to buying it from Intuit. Would you mind telling that story?
Sure. So I was general counsel for MyCorporation when we were acquired by Intuit back in 2005. And so I ran the business division under Intuit for 5 years. And working in a small environment under a huge corporate umbrella was just a really big challenge. It was, to me, I would say it was the best thing and the worst thing. It was the biggest learning experience I could ever have as an entrepreneur, because it's sort of where you ultimately end up if you were an entrepreneur in some ways. But then realizing it was the most difficult way to run a business. Our cost overhead and structure were really not commensurate with what our business revenue was. We were making just under $10 million, and Intuit, was making almost $4 billion. And so that we were such a small piece in that pie, so we got very little attention, and making changes was very difficult. And they recognized it, and I recognized it. And sort of at the same time, we came together, and we were discussing what next with the company and where would this go. And I kind of thought this was a great opportunity for me to present an offer to purchase the business from Intuit. And so they are wonderful in the sense that they wanted the softest landing for the employees and the shareholders and, of course, our customers. And so this was sort of a nice transition rather than selling the business to someone else who wasn't familiar or closing it or doing something that might not have been beneficial to anyone. They realized that this was probably a good solution. So I took all of the team, and we still are in phenomenal partnership with Intuit, and we've, kind of right-sided, I guess I like to call it, our infrastructure, where our costs are not more than our revenue, which is awesome.
So we've talked a bit about LLCs and corporations, but what are some of the tax advantages that go along with those?
A lot of tax advantages that a corporation and LLC have are self-employment taxes. So with a corporation, you actually pay only self-employment taxes on that component you're paying yourself as an employee of the business. And you pay yourself as an employee the kind of reasonable salary that would be paid. So if, for example, in my role as general manager, I was paid $50,000 a year, now as owner of the company, I could be paid $50,000 a year. I don't have to be paid more because my profits are more. And so I can take that salary and only pay employment taxes on that component. And that's actually a large percentage, in around 13% of employment taxes. And so it's a huge savings opportunity for entities that have a corporation. There's also, of course, all of the business write-offs that you would have. Your car, your business expenses for travel, for phones, for eating, entertainment, all of those things are obvious things that people also can write off. But one of the other things that people don't think about, which is actually the kind of opposite part of taxes, is the audit component. and your risk of being audited is 0.03% when you're a corporation or LLC, and it's almost 2.7% when you're a sole proprietor making that type of income. Huge difference. So because you're sort of a small fish, in a big sea when you're a corporation, and you're making $10 million in revenue, they're not, looking at you, paying attention to those details. But when you're a sole proprietorship, making that kind of money, it is a significant kind of red flag for the IRS. And so kind of avoiding the red flag status is actually a good thing for many, many small businesses, and it's just a wise idea.
Any final thoughts for us on incorporating or other aspects of business?
So I think that forming a business, a lot of times people think about the incorporation and LLC component, but I think there's other pieces that you want to make sure that you're attentive to besides that. I mentioned early on, talking about kind of the bundled products that we have, that you can get your domain name and your website and all of those things, and all of those are kind of built around developing a brand for your business. Often kind of your business is a bit novel in some ways, but sometimes it's a commodity, and it's because of your brand that you're making it unique. So there's different benefits to kind of setting your business apart in developing a brand or business name. And with that, I'm always really cautious to tell people that it's important to protect their trademarks, to make sure that your trademark and your business name, your logo or slogan are protected and they're yours. It seems to me that when people incorporate it, they think that that is one and the same of a trademark, and it's not. And it's kind of a bummer when one day you're spending a whole lot of money marketing your business and building a brand for yourself and getting your name out there and pitching your product or service, and then all of a sudden you either find out someone else has that name that pre-existed you, or B, someone comes in the market and enters with a name that's really very similar. And unless you've protected your trademark and made sure that that mark is yours on a nationwide level, and as we all know, the world is becoming smaller and smaller. With the internet, it's like, you could search, and if there's one company out there and then company B pops up and it's a very similar name, it just really stinks, because for that company A that started out and spent a lot of money investing and building the brand and that kind of thing, company B can come along and even with a slightly similar name and similar products can really infringe on it. So it's a real risk for businesses, and so I always advise that separate and apart from looking at the corporation LLC, which is critically important, and especially when it comes to trademarks and logos, you want to make sure if you infringe or someone else infringes that you have that corporate veil protecting you from all of your personal stuff either way. But besides that, making sure that your logos and trademarks are protected.